Hello Premium Hunters, and welcome to another episode of my weekly portfolio performance update. This is for week 10, which is the first full week of March, or March 3rd through 7th. My name is Andrew, and I have been trading options for over 25 years, and I'm currently averaging over $5,000 a week with my options trading. And this channel is where I pull back the curtain to show you what I do, exactly how I do it, and to just show you that it is viable to make a consistent profit by trading options. So if you are interested in following me on this journey, then make sure you like, subscribe, and hit that bell notification so that you can be notified each time I upload a new video. I typically will release my weekly performance update videos on Monday of each week. So be sure to stay tuned for regular updates. Now, just a quick disclosure before I get into this week's video. I am not a licensed financial advisor. You can see the disclaimer in at the bottom of your screen, but the information provided on this YouTube channel is for informational purposes only. So with that said, let's go ahead and hop on into it. Just to give you an idea of what to expect with these videos, what I do is I cover a strategy that I implemented or closed out for the week. I'll show you the chart, kind of give you an analysis and an overview of how that strategy worked. I will show you how much money I made or lost on that strategy. I'll do a bit of a performance analysis for that strategy. And from there, I will do an overall performance analysis showing you what I made total for that week, and I will also compare that week to previous weeks, and then I'll give you any insights that I've gained from that analysis. So before we get started with this week's analysis, let's recap what I've done for previous weeks, and this table shows my performance for each week, weeks 1 through 9 so far. And as you can see, last week was my worst week so far with a loss of just over $3,600, but for the year so far, I'm still doing pretty good at a total of $47,564 in profit, and that gives me an average weekly performance of $5,285. So how did we do in week 10? Well, stick around and find out. So for week 10, I had a total of 22 closed trades, which I think is a record for the most amount of trades that I've closed. And I found that it becomes a bit tedious and monotonous going through each and every trade because a lot of the trade strategies are the same. So I'm really just repeating the same thing over and over and over again, and I think that gets a little bit boring after a while. So I decided to change things up a little bit this week, and what I'm going to do is I'm going to cover all of the strategies that I employed and then show you at least one example of each one of those strategies, but I'm not going to go through each one of them because, like I said, it tends to get a bit monotonous after a while. Now, before I get into these trades, I do want to encourage you, if you are new to options trading, make sure you check out my Options Demystified video, which covers some of the basics about options trading, and it will help you understand some of the concepts that I'm discussing in today's video. I have that linked in the description below. Now from here, what I'm going to do is switch on over to the platform I use for tracking my trades. All right, so here we are in the trading platform, and I have the total profits. I've got all my trades pulled up, but as you can see at the top of the screen are the total profit and losses, and I have that blurred out because we're going to wait until the end of the video to cover that. But one thing I do want to mention is that it's really important to track your trades and to be able to have the ability to go back and do an analysis on your trades. And that's a big mistake that I made when I first started out with options trading. I would do the options, I would see that I made a profit, but I would just keep going, and sometimes I would take a loss, and I would never have the ability to go back and do an analysis over the long term or even the short term for that matter. And that's just so crucial. And this TradeZella platform makes it really easy to go in and tag your trades and to be able to search all of your trades of a certain category or a certain strategy by a certain time frame, see how much money you're making, see how much money you're losing, see which strategies are the most profitable, see the ones that are giving you the best return on investment. And so I really encourage you from the get-go, if you do decide to start trading, if you haven't already started, make sure you're using some kind of platform, whether it's a spreadsheet, some kind of tracker to track your performance so that you can go back and do an analysis. If you're interested in using TradeZella, I will show you some of the features, some of the basic features as I move forward through this video. But if you are interested in signing up for this platform, I do have an affiliate link below in the description, which does help me out with this channel. So I would appreciate it if you'd use my link when signing up for TradeZella. But with that said, let's go ahead and take a look at the trades that I closed out for week 10. So as you can see on the screen here, these are all of the trades that I have closed out for the week. I have those filtered out through this one tag called Week Closed. And the tag that I have selected is 25-10, which just stands for year 2025, week 10. So now what I've done here is I've filtered out just the covered calls that I closed for the week, which there's only one of them. This is the first strategy that I want to cover with you. And so I have all of my strategies filtered down to just the covered calls. There was just one of them. I made $463.44. It was a 95 call that I sold. And after all of my commissions and fees, I made $463.44. So let me go ahead and jump into that trade, and I'm going to open the stock chart to explain how this strategy works. So now I have the stock chart open for the strategy that I closed out, which is part of TradeZella, the trade tracking platform that I use. And what we see here, this blue line, is stock that I purchased in Baidu. I purchased it at $108 per share, and this was purchased back, let me scroll back. The beginning of the line is when the trade was opened or when the shares were purchased, which was November 11th. And the reason I bought these shares was because it was an options trade that I put on back, I think it was back in October, and it ended up going against me. I ended up getting assigned the shares, but since I had the shares assigned to me, I decided, well, let me go ahead and drive down the cost basis of those shares by selling calls against those shares. So I've been doing that ever since. And right now, this green line is the current trade that I closed out for the current week. Let me zoom out a little bit so you can see the whole thing. That was a little bit too far. I'll zoom in a little bit more. And so you can see here I have the cost basis recorded on the stock chart here. It's currently $90.25. I have to sell my call above the $90 price level. So I sold it at $95. So I sold that call on the 19th of February, and it closed out for a 50% profit on the 4th of March. So with that trade, I ended up making $463.44. So let me go back to my trade table here. And just to show you how I can quickly and easily switch from strategy to strategy, all I do is I come up to my filters. I have all of my strategies recorded under my playbooks. So I click on playbook, I deselect covered calls, and then the next one I want to talk about is a strangle that I did. So let me select strangle, apply filters, and now you can see the trade that I did for the week closed of 25-10. It is a strangle. It was a gold futures options trade. A strangle, let me go ahead and open the stock chart here so that I can explain how this strangle works. All right, so here's the stock chart I have opened, and I've got it zoomed pretty far out so that you can see the big picture of what's going on here. A strangle is where you sell a put and you sell a call. So I sold a put at the 3,200 strike price on, when was this? This was January 27th, and I sold a call at the 2505 strike price at the same time. So I sell both of these at the same time, and I collect a credit for selling those. As you can see, those price levels are pretty far away from the price level of the underlying, which was about $27.90 at that time. But as time went on, the underlying went up in value and got closer and closer to my put. I do not want the underlying to breach my put because that will put me in a loss position. As long as my underlying stays between My put and my call, by expiration, I will make money, but as soon as I open a trade, I do put in a good to cancel close order for a 50% profit. So I almost never go to expiration. It usually lasts around 2 to 3 weeks. This is a longer term trade. But as you can see, like I said, the underlying was getting closer and closer to my put. And as a defensive measure, what I can do is roll what we call the untested side. The call in this particular scenario was the untested side because the underlying was approaching or testing the put. So I can roll the call up to bring that closer to the underlying. It allows me to collect more credit, which gives me a higher chance of being able to close it out for a profit. And then as you can see, the underlying kind of settled out. It went up and down, but it pretty much for the most part remained at that same level over the next couple of weeks. And I was able to close out. This wasn't quite a 50% profit, but I went ahead, I decided to close it out anyway. And I did close out this position, as you can see here, I was able to make $2,283 on this trade. All right, now, so the next strategy I want to talk about is the poor man's covered call. So let me just go into my playbook and deselect strangle, find my poor man's covered call. We'll select that and select apply filters. And as you can see, once it pulls up all of my poor man covered calls, I have a total of 7 of those. I made a total of $467, just over $467 on all of the poor man covered call trades I did for the week. A 100% win rate with an average win or an average profit of just under $67 per trade. Not a ton of money on these trades, but it's income. And who can complain about it's better to have a profit than a loss. I'm not going to complain about having a profit on any trade. So let me go ahead and open one of these up so we can launch the stock chart so I can show you how this trade works. All right, so here we have the stock chart open. This is for Palantir. And this purple line down here represents a LEAP option that I purchased. Let me scroll back here to see when I opened this LEAP option position. We'll scroll back. I know it was quite some time ago. So this was back on November 19th of 2024. I purchased a call, a LEAP call for a 42 strike price. So the reason I do this is it enables me to control the underlying stock rather than buying 100 shares of the stock. I buy a call option. It cost me $42 rather than $65, and it gives me the ability to control 100 shares of the stock at a much lower price. So when I buy a LEAP option, which I don't typically buy options, I normally sell them, but this is one exception. I'm buying this for the long term. This is typically about a year and a half for the expiration cycle of this option, but it allows me to control 100 shares of the stock at a much lower capital requirement. So now moving ahead with my calls being at a 42 strike price, and let's go ahead and move back to our current, here we go, current time frame with the stock being at around $85 per share. I am clearly in a profit position, so I can sell these calls at a higher strike price against these calls that I own at a lower strike price, enabling me to collect premium if these calls stay out of the money. As you can see in this situation, I sold this call, which was a 93 strike price call on March 4th, and I was able to collect 50% premium on March 7th. It never went in the money, so I was able to collect that premium. Now, what would happen if it did go in the money? I could either roll this out in time, or if I decided to just take assignment, I am able to buy shares here at $42 per share. I will have to sell those shares at $93 per share, but the difference between 93 and 42 is a pretty good profit margin. So I'm perfectly okay with doing that. So if we look at what the possible outcomes here, they are: one, my call option stays out of the money and I just get to keep the premium that I collected for selling the call, or two, the call option goes in the money, in which case I have to exercise my calls to purchase the stock at a lower price so that I can sell these shares at a higher price when I get assigned on these calls. Either way, I'm making money, so it's okay. But when I purchase these leaps, I do want to hold those for the long term. So when I sell these calls against the leaps that I own, I do like to stay pretty far away from the stock price, which lowers my chances of being in the money and getting these shares called away from me. All right, so just to recap here, I did 7 of these poor man covered calls. And just to break it down, you can see that I did covered calls in both NVIDIA and Palantir. If I want to see how much money I made in each, all I have to do is come up to my filters again, go to my general filters, select symbol. I can select Palantir, apply. I did 2 in Palantir for a total of just under $9. Come up here and select NVIDIA, apply filters. 5 of those in NVIDIA for just under $259. And the last strategy I want to go over is the weekly wheel. So let's go ahead and go back into my playbook. We'll deselect the poor man's covered call, put in the weekly wheel, select that, deselect NVIDIA because I don't do any weekly wheel in NVIDIA, and that will show all of my weekly wheel trades where I've done 13 of those, and as I've said, I've mentioned in previous videos, the weekly wheel is my most common trading strategy. I do have a video where I show you exactly how I execute these trades step by step. It's linked in the comment section below, and it's called How to Print Money Using the Weekly Wheel, so I definitely recommend you check that out. But let's go ahead and take a look at an example of one of these trades. All right, so here we have the stock chart for Amazon. So if you watch the video on how I execute the weekly wheel, all I do is I select a stock that I don't mind owning. I don't mind owning the shares of the stock. And then I sell puts on this stock. I sell out of the money puts. And as long as that put stays out of the money, I get to keep the premium that I collected for selling that put. And I just keep doing that over and over and over again until eventually and inevitably the put will go in the money at some point, at which point I will have to buy the stock at the strike price that I sold for that put. And that's what happened in this situation here. I have shares, the blue line here represents shares that I purchased at $230 per share. And if we scroll back, we can see when I purchased those shares, which was on February 21st. But you can also see here on the stock chart, I have recorded my cost basis for these shares, which is just under $220 per share. And the reason I have that recorded is because when I go to sell calls, once I own shares of the stock, I can then sell calls against those shares that I own to continue collecting premium. But the thing I have to be careful about is not selling those calls below my cost basis. And the reason I don't want to do that, because if you think about it, if the stock ends up going up and breaching my call and my call goes in the money, I am going to have to sell those shares at that strike price. And if the strike price is below my cost basis, that's going to be a loss. The main goal here by employing this strategy is to protect our capital. If we lose our capital, we lose our ability to implement this strategy. So the number one goal needs to be to preserve our capital. The secondary goal should be to generate income off of this capital that we have. And that's why we track our cost basis to ensure we're not being forced in a position to where we have to close out any one of these positions at a loss. And so here we can see that I sold this call on March 6th, and then on the very same day I closed it out on March 6th. It never went anywhere close to being in the money, and I was able to collect $160 for this particular trade. Now there is one other trade that I wanted to show you on this weekly wheel, and the reason I want to show you this one is because it lets you know what it looks like when a position does go in the money. So let me get this one opened here. Let me get it zoomed properly so that you can see it. All right, so here we are. And so this is a level 2 put that I sold. Level 2, again, if you go back and watch the video on how I print money using the weekly wheel, I have capital that is reserved into 3 separate pots. And again, this all goes back to preserving capital. And so once I go in the money on one of my puts and I'm selling calls against it, if the stock continues to go down to a point to where I am unable to collect enough premium on the calls that I'm selling, I can open up a new pot or unlock a new pot of capital to continue this strategy at a different level. And that's what I did here. I sold a put at a strike price of $202.50. When I sold it back on March 3rd, it was out of the money. It did go in the money and then it went back out of the money. We've had some volatile markets here. If you've been watching, you've seen the market has been selling off quite a bit, causing a lot of volatility. Amazon ended up going in the money at the time that this put expired, which means the shares got assigned to me at the strike price of $202.50. So I purchased the stock at $202.50. Now, mind you, this is the first put that I sold at this price level, so the premium I collected on this put was all the premium I collected at this price level. So my cost basis is the purchase price of the shares minus the premium I collected for this put, which was $1, which means my cost basis is $201.50. So now when the market opens on Monday, I'll be able to sell calls. As long as I can sell a call above a strike price of $201.50, I will be okay. I won't be putting myself in a position of having to take a loss, and I'll be able to collect premium, continue collecting premium and generating income off of this strategy. Now, one of the things to keep in mind is that when this does happen, and you do get assigned the shares, you get to keep all of the premium that you collected, which in this case was just under $600 by the time that you factor in commissions and expenses. My profit was $593. All right, so to recap the weekly wheel strategy for the week, I did 13 trades for a total profit of $2,382.19. They were all winners, and my average profit was $183. We can go ahead and take a look. I do this strategy on 3 different stocks currently. It's Amazon, Google, and Palantir. So if we want to see how much I made for each one of those, let's go ahead, go back into General, go back into Symbol. We'll start with Amazon. And for Amazon, we did 7 trades for a total of $1,200 and just under $1,274. We'll take a look at Google. On Google, we did 4 trades for a total of $665. And then finally, Palantir. We did a total of 2 trades for just under $443. All right, now, so all I have to do to see my totals for the week is I can come and deselect the symbols to show all of the symbols and deselect the weekly wheel to show all of the strategies. Apply that for week 25-10 and I'll see all of the trades and I can see my total for the week. I had a total profit of $5,596.32. Again, I did a total of 22 trades. I had a 100% win rate with an average profit of $254 per trade. All right, so that was pretty close to our average for what we've been doing weekly, each week for the year. And when we plug that into our annual table, we can see we have a new total of $53,160 for the year. and the weekly average has jumped up just a little bit to $5,316. All right, so that's it. Not a bad week, especially considering the volatility for the week. So again, I appreciate you stopping by, and I hope you enjoyed today's weekly update. If you are interested in options trading, I do invite you to like, subscribe, and hit that notification bell. And again, I'm looking to build a community here, so if you are interested in options trading, please drop a comment in the comment section below. I'd love to hear from you. Are you currently trading options? If so, what's your favorite strategy? How are you performing? Are you seeing a profit for the year so far? And until next time, I hope you have a great week, and we look forward to seeing you next week on Better Options. Bye-bye.